Welcome to CashOps, where today we are analyzing the intricacies of the U.S. housing market to uncover the potential opportunities and trends that could benefit you, the investor, the homeowner, or the market spectator. If you're curious about whether we're hitting a market peak or if right now is the time to invest, then this video is for you. Let's jump straight into it. So question number one is, are we approaching the peak? Is this it? Let's take a look. So with housing prices that are continually on the rise in US cities, it's only logical to question whether the market is nearing its peak and if we're due for a downturn. Is it coming? Let's take a look at the data. Surprisingly, the current data suggests that we are far from the top. There are several revealing indicators that not only provide a snapshot of today's conditions, but also give us those indicators of where the future market is going to move. So jumping into number one, we have to understand the supply crisis. So as of now, the US is experiencing a severe housing supply shortage. This has been a persistent issue post-pandemic of COVID-19 back in 2020, 2021, so we're still feeling that pressure today in 2024. This shortage is driving up prices and rent, making affordability a significant concern for the homeowners and potential buyers. The construction sector has not fully recovered. This only exacerbates the problem with new housing developments that are lagging, which are considerably behind the demand. Moving forward, new constructions are at a historical low, with projects taking longer to complete, an average of 9 months now compared to 6 months pre-pandemic. These delays are due to various factors, including longer approval times, a lack of construction labor and materials. So what does this mean for the market? Essentially, we can anticipate tight supply continuing to buoy prices for the foreseeable future. Taking a look at the rental market, the rental segment is feeling the brunt of this crisis. With vacancy rates plummeting below 1% in many major cities, rent prices have soared. This increase in rental costs is taking a larger chunk out of the household incomes, forcing spending cuts in other areas, which in turn can impact the overall economic activity. Just a reminder, if you're finding this analysis helpful and want to stay up to date with the latest in real estate insights, don't forget to subscribe to CashOps. We have all the personal finance information that you need to stay informed and make educated decisions with our expert guidance. Moving forward to economic implications, higher interest rates have traditionally accompanied rising homes and rental prices, leading to more expensive mortgages and rent payments. This scenario strains buyers and renters alike, but contributing to slower economic growth. So with inflation concerns partially subdued, the focus typically shifts towards preventing a recession, which we could see loosening of monetary policy in the near future. Taking a look at the government responses and market predictions, the federal and local governments are attempting to address these issues through various measures, but the effectiveness of these initiatives has been mixed. The promise to accelerate construction projects and streamline approvals has yet to be met with the necessary urgency. This bureaucratic sluggishness could lead to continued shortfalls in housing supply, which is going to keep the market high. So why does this matter for you? For potential buyers, the current market conditions suggesting that wait for a significant price drop might not be advisable. The supply constraints and prolonged construction times are likely to keep those prices stable or even push them higher in the short to medium term. For investors, this could be an opportune time to consider entering the market or expanding portfolios before the next upward cycle. Taking a look at the shifting market dynamics. So the frenzy of bidding wars and lightning fast sales might be a thing of the past. As mortgage rates stabilize and buyer competition eases slightly, there's room for more balanced transactions. This could be a welcome relief for the first-time homebuyers who faced intense competition in the previous market peak. The construction industry is slowly embracing innovative solutions to expedite building processes. Modular construction, 3D printing technology, and prefabricated structures offer promising avenues to bridge that supply gap we mentioned. While widespread adoption might take some time, and we're still not seeing the fruits of the labors from this new innovative technology yet, these advancements do signal a move towards faster and more efficient construction methods. Taking a look at geographical diversification, as we know, not all markets are created equal. And while major coastal cities may continue to experience tight inventory, some mid-sized and suburban areas boast more balanced markets with better affordability. Consider exploring these areas if you're flexible with location, but prioritize space and potentially lower costs. Let's talk about the power of local expertise. In a complex market, a knowledgeable real estate agent can be your greatest asset. Make sure to partner with a professional who understands your needs and can navigate your specific market dynamics while making sure to work for you and your best interest. Their expertise can be invaluable in identifying undervalued properties, negotiating favorable terms, and securing a home that aligns with your long-term goals. Despite the current hiccups, the underlying demand for housing remains strong. Millennials are entering the prime home buying years, and the overall U.S. population continues to grow. This inherent demand suggests that a sustained housing market crash is unlikely. While short-term fluctuations might occur, long-term prospects for the housing market remain favorable. Our strategic insights for investors with a long-term perspective, this market presents unique opportunities. Consider fixer-uppers with potential for renovation and resale, or explore rental properties in areas with high demand and limited vacancies. Remember, successful real estate investment goes beyond just buying low and selling high. It requires a strategic approach backed by thorough research. The U.S. housing market in 2024 presents both challenges and opportunities, but by staying informed, considering diverse strategies, seeking expert guidance, you can navigate this market with confidence. Here at CashOps, we're committed to empowering you with valuable insights and market trends. Remember to like this video and subscribe to CashOps for more informative content on the ever-evolving world of real estate and personal finance. We'll continue to analyze market trends, explore investment strategies, and answer your burning questions. In the comments below, let us know, what are your biggest concerns about the current housing market? What questions do you have for our team? We're here to make informed decisions by helping you achieve your real estate goals. Thanks for watching, everyone, and we'll see you in the next one.